All right, here we go, ladies and gentlemen, and beautiful people. I hope everyone is having an amazing day so far. Yesterday, I was unable to do part 2 of the indicators training because I was not feeling well. But today, I'm ready to rock. I'm ready to roll. So we are going to cover the next part of the indicators that I wanted to go over. And those are going to be as follows: zigzag, money flow index, accumulation distribution, average true range, true strength index, parabolic SAR, super trend, Ichimoku clouds, and Keltner channels. What we covered in the last lesson was moving averages and moving average ribbon, which is a new basic technical indicator you can now use. MACD, moving average, convergence, divergence, RSI, stochastic Bollinger Bands. So we've already covered those in the last lesson. So we're gonna, start. We could do this right in this order, or we could mix it up however you guys want to do it. But I say let's get right into it. All right. So let me get up in here and let me erase this. Okay. Let's take this, bring it up here. All right. And we'll just get right into it. We don't have to waste a lot of time. First indicator we're going to go over is the zigzag indicator. So you go over here to indicators, okay? And what we can do is we can type it in, right? Zigzag, okay? So you're going to see is in the basic technicals. The community provides advanced indicators that developers can create and put into the market. Some of them are invite only, some of them are free for the community, but we're talking about the basic, what's already available on TradingView. You click on Zigzag. And the reason why we're doing this is because you may go on another website that may have a chart that's powered by TradingView, but it is unable to produce custom indicators like what the community can produce. So by us going over the technical indicators, the ones that are of standard issue, those are going to be the ones that we're going to cover, because you could use these on any chart that you use. There's a lot of different companies out there, trading education companies, that have widgets, TradingView widgets, or sites that are powered by TradingView. And so you're going to be able to use these technical indicators on every chart possible, okay? That's given by TradingView. And a lot of this stuff you can also find on MetaTrader as well. So right now we just clicked on the zigzag indicator, all right, and you can see that it is live and active. Now, here's the thing when it comes to zigzags, okay? Zigzags is not going to follow every single impulse that you see on the chart. It is going to be focused on the longer term moves that are going on. So we are on a 5-minute chart. Let me make sure I got a couple of my apps rocking and rolling right now. Let's use this one. Okay, and let me get another one rocking and rolling real quick. Okay. All right, cool. Let me see. Let me just do a little test. Make sure that I can zoom in. Okay, boom, there you go. All right, cool. All right, and so with that said, let us go and change the time frame of this chart to a longer time frame, okay? We could go with a 1 hour or 4 hour. Let's go with the 4 hour. All right, and now you see the zigzag indicator, all right, in its full work. Now, what's interesting about the zigzag indicator is that if you follow up with it, with, like, for example, the Fibonacci retracement, which is one of the advanced tools that we went over, you will see that there's a couple of things that you could calculate together, and it'll actually make really good sense, kind of align just right. and you can use these in combination with one another. You will see that right over here, start over here, this is the top, okay, 1 is 0, all right, and in between, where did it where did it actually started to have some retracements? All right, we see right over here on the 382, okay, right over here on 382, you see how that acted as a support. See that, right? And then when you look at 618, this was a main retracement point right over here, okay? Came up to this spot, all right, started really retesting at this level, okay, between the 50 and the 618, and it started moving up, and here's another point. So what you will see is that when you combine zigzags with the Fibonacci retracement tool, it actually does become extremely beneficial. And so if we zoom in, all right, and you're kind of right here, the market is basically retesting a line that the zigzag indicator drew out. That's pretty telling, all right? It's telling you there's an interesting point. You can see that there's several wicks to this point over here. And when we look to the past of a chart, it is telling us a story. So you see this is a support level right over here. You can see it. Look at the long wick over here, another long wick right there, right? So this is a level, all right, that is a support. And so it's this level over here where the market is currently at. So it's pretty telling. Let's go to the 1 hour. All right, and here's a closer look at that. All right, what the zigzag drew. Okay. And so this, again, it helps you focus more on the long-term moves as opposed to all the small little impulse moves that are going on. And then when you align it with a tool like with the Fibonacci retracement tool, you will see that you could use it as additional confirmations to confirm certain levels, to confirm the price is retesting or, basically touching the basis of certain levels. Okay, so zigzag is you won't be able to really use it as a signal providing type of indicator, but it will illustrate to you long-term wise where the overall market is going. So higher time frames. So again, if you're going to use the zigzag, you can use the zigzag on the 30, okay, 1 hour, 4 hour, weekly. Could you use it on the lower time frames? You can, but really the zigzag is designed for letting you see where the overall pushes are happening in the market. Okay, so yeah, that's the first indicator that we were going over, and we're gonna go on to the next one. All right, so let's give this one a check over here. All right, boom. Zigzag. All right, we covered that. All right, the next one that we're going to be covering is the money flow index. Okay, money flow index. All right, let me also get rid of let's get rid of some of these just so we can clear up the chart. I don't like it when the chart looks too busy, right? So the next one that we're going to go over is the money flow index, okay? So let's go right in here. All right, because I already had these pulled up for the lesson. So money flow index. Let's bring this to the second indicator window over here. All right, it's going to be this one right over here. This is the money flow index. All right, and so when you see the money flow index, it really looks very similar to the RSI, okay? The RSI, you guys remember, is the relative strength index. And honestly, when it comes to the money flow index, this is a pretty good tool to use. All right, there's a formula for calculation that I'm going to be basically hand drawing right over here. All right, so let's do that. Okay. All right. And so the calculation, there's actually a couple of things. There's 5 steps to really calculating how the money flow index is perceiving the market. Okay. So number one is going to use typical price calculation. Show you how that looks once my pad turns on. There we go. Perfect. All right, so let's bring it here to the side, a little to the side, okay? All right, and here's the typical price calculation over here. Okay, so typical price, this is how it's calculated. All right, it's the high plus the low plus the close. All right, divided by 3. So this is the first calculation. All right, and that's the first calculation, but there's more, okay? The second calculation is the raw money flow, okay? So the raw money flow is as follows. Is typical price. I was going to put TP, but that means take profit. So typical price plus volume. All right, and this is a plus. This is not. Okay, this is not multiplication. All right, there's 5 calculations, okay? Third calculation. All right, basically positive and negative money flow. Okay, compare the typical price of the current period to the previous period, okay? So you compare typical price to the previous period. Okay. Number 4, the fourth calculation, the money flow ratio. All right, and here is the money flow ratio. It is, let me just bring it like this. All right, it's the positive money flows. End periods. All right, divided by negative money flows. In periods, okay? Then what we do here for number 5, money flow index. All right, money flow index. It's 100 over 1 plus money flow ratio. Okay. So, typical price, raw money flow, compare typical price to the previous period, money flow ratio. Okay, this is how you come up with that. Money flow index is 100 over 1 plus the money flow ratio. All right, so these are the 5 calculations that make up the money flow index. Okay? All right, hopefully you can see that like that. Let me bring this in a little bit more. And there you go. All right, so the money flow index, okay, what brings the calculation of all of it is these 5 things. And now what we're going to basically go over so you can actually be able to use it, honestly, is pretty simple. So this is considered the volume weighted RSI. So think of the RSI, right? The relative strength index, overbought, oversold, all that good stuff. But this is also with volume being calculated in it. So it's a little stronger than the RSI in my opinion as a trader. So we already know that whenever we see the market up here, we already know that it is overbought, right? We know this, okay? Overbought. Okay, so right at the 80 level, if it's anything above that, all right, it is overbought. Okay, which means that you should be prepared to sell. All right, boom, here's a sell, here's a sell, here's a sell. Okay, you see these opportunities right there, and this is when the market is oversold. Okay. And so when it's below the 20, it is in the oversold zone. So you want to wait until a signal pops up. There's a little stronger, okay? A little stronger than the typical RSI, all right? And there's several, calculations that, bring this to light, okay? So money flow index. 5 different calculations that go into all of it. It is considered like a volume weighted based RSI. So it's not just price, it is also volume. Okay. It uses price and volume to predict movements. All right. And essentially, it's another great tool to have in your arsenal. Another great tool to have in your arsenal. All right, let's bring it in. Up. All right. So now that we're here, and give the money flow index a check. Okay. The next one that we are going to cover is the accumulation distribution indicator. All right. And so we're going to do the breakdown kind of like what we did as far as calculations is concerned. All right. So let me make sure that I pull this up for you. All right. So here we go. Let's jot down some notes once again. All right. So accumulation, distribution. Okay. Utilizes some other calculations as well. All right. So close location value is one of them. Okay. Oh, wow. This is massively huge. All right. All right. So the close location value for the accumulation distribution tool, all right? Accumulation distribution tool, sorry. All right, is as follows. All right. So this is the formula for that. All right. CLV equals all right. So you have the close minus the low, okay, minus the high minus the close. If you remember, if you remember math, you remember the rule PEMDAS. Some of you know it as a different acronym. Basically, you have to take care of the parentheses first, right? So once you do that, okay, then you could, come up with the calculation manually yourself. You don't have to, because this is what indicators are for. They do the calculations for us, but this is one of the determining factors behind the accumulation distribution. All right, and here's another one, okay? It's another one of the calculations that all work together to create what the accumulation distribution indicator indicates, okay? So AD, all right, accumulation distribution equals the previous accumulation distribution, okay, plus the closed location value times the volume. Okay. So this is where we get the real accumulation distribution. All right. We get the previous AD plus the close location value plus volume. All right. So in order to first get the CLV, here's the calculation. Then you bring the answer for that CLV right into this problem, okay, and get that figured out. This is accumulation distribution, all right, and it has powerful reasonings behind it, behind why this is fire. This is a volume-based indicator, okay, used to gauge the cumulative flow of money. Cumulative flow of money. I'm so sorry. I get tongue-tied, Puerto Rican and all that. Sometimes I get tongue-tied, all right? So it's funny because, I grew up, in a household where we speak Spanglish. And I'm one of the newer generation cats, right? So, I don't speak as much Spanish as the ones that are older than me, but I still get tongue tied with English, and I still get tongue tied. I mean, I'm always gonna be tongue tied with Spanish, So it's like, on both sides, I'm like, there were words that I only knew in Spanish that I never knew in English. So I get tongue tied sometimes, right? Cumulative. All right, there we go. All right, so the accumulation distribution indicator is powerful. Now, basically, what are the uses for? Right? You're not really here to know what the calculation is, so you can manually do it. It's just important that you do understand that every indicator has a different formula behind it. Okay? Every indicator has a different formula behind it. But essentially, what this is going to help us identify is uptrends, downtrends, but also divergence. So you guys remember MACD, the moving average convergence divergence. One of the biggest things behind it was the divergence factor. Okay? If the price action is doing this, but this tool is showing us a divergence compared to what the price action is doing on the main chart, then that's telling that the trend might bend, or there may be a momentum shift of some sort, right? So this is what this shows us. So now what I'm going to do is I'm going to clear this up. Okay. We're going to double click. We already covered the money flow index. Let's take that out of the way. Here we go with the accumulation distribution right over here. Okay. And so what you would see with the accumulation distribution tool, okay, what you would see is something that's very simple. What you're gonna see with this is to see if there's a notable difference between the price action and what's actually going on. Okay. Now check this out. Okay. You can kind of see. All right. The market hit 160, 200 levels. All right, we hit the 160, 200 level, right? And then it dropped all the way down to 151.740 levels, right? Do we see a difference here with the direction that the market was moving in overall? Because if you do, that is divergence. Now we can bring it in a little closer to see if you can see that, okay? Where can we see on the price action, price is falling while it's rising here, or vice versa? Okay. A lot of times these divergences, they do show themselves. Now, if the market is above the top half, all right, this is clearly going on an uptrend. Here's a sharp move down, but you don't really see this moving down like that. Okay, it's kind of staying more smoothed out. It's kind of staying more put. All right, if we go to a lower time frame, let's see if we can see some other divergences. All right, let me see if we can see during trending conditions. All right. Sometimes you have to just look around. All right. If you don't see it, you don't see it. That's fine. But basically, what this is going to help out with accumulation distribution, it's going to help out with basically emphasizing when the uptrend or downtrend is happening, as well as pointing out a divergence. Maybe I'll have to look into a different currency pair. Sometimes it's obvious. You may be able to see something that I don't, you know? All right, so look at this point. Okay, here we go. Found something for you. Okay. So from this point to, all right, this point right over here. Let me show you what I'm talking about. This is how you pinpoint it. All right. Box it in. Use the trend line if you must. But look, notice how price is moving up for the most part here, right? Look over here on this side. Price is mostly moving down over here. This is a divergence. This is what you want to look for. Okay. So if the market is pushing up from the price action perspective, but over here on the accumulation distribution, it's falling, okay, then that right there is basically telling you, hey, look, here's some kind of divergence. It's not as strong, but you will see some of these being pointed out in the market, okay? Am I on a different? I think I am on a different pair. Okay. All right. Let's go to USD JPY again. Yep. There we go. All right. You're going to see some divergences here and there. And there we go. Okay. Wish I could show you better examples of accumulation distribution. All right. So let's move out of that one. And now let us go over to the average true range. Okay. Put it in here. Average true range. Boom. All right. So the average true range is right over here. Look at that clear divergence. You see that? Now this is showing like really good divergence. I like that. Okay. With the average true range, it is showing true market volatility, and that's all it is. So don't think of overbought, oversold. Don't think of any of that stuff. This is just true market distribution. And so we see the price action, we see where it's at, and we saw how it reflected over here. And you can see there is a stark contrast there. Let's talk about the formula for the average true range. All right, so the average true range formula All right, formula is as follows. Let me handwrite it over here. True range equals here's the max high minus low within parentheses, within brackets. All right, so here's the formula for the average true range, okay? You have the max, okay? High minus low in parentheses, okay? High minus previous close, okay? Low minus previous close, all right? And so when you come up with the numbers all together, all right, and you get the result of it, that is the calculation behind the average true range, okay? Now, let us talk about how you are going to be able to use it. Okay? Now, it's going to take the difference between the current high and the current low, the absolute difference between the current high and the previous close, the absolute difference between the current low and the previous close, okay? So that's basically the simple calculation to find the ATR, an average of the true range over a specified period of time. Basically, all right, it's going to always start in a 14-day period. This is how you come in to adjust. Here we go. All right, it's going to be set to a 14 period, okay, over here. All right, and that's what it's basically going to cover. All right, it's going to cover the true range. All right, the true range behind the volatility of the ranges being measured. All right. All right. This is how you're going to find it. So if the market is pushing up, but it's showing that there's no volatility, then you know, that's already telling right then and there what may just happen. Okay, so volatility is important because market likes to retest certain levels again and again, and so while there's volatility, it's going to be fast. All right, as you can see, there was a lot of volatility when the market, made this spike up. There was not any volatility at all when it started to drop down. That's how it works, okay? All right, not enough volatility. All right, price is gonna fall. Price could fall or rise during high volatility, okay? But if there's no volatility at all and it's kind of flat, eventually the market's gonna fall, okay? Market goes up and down only. Excuse me. All right. So we cover zigzag, money flow index, accumulation distribution, average true range. All right. So what I'm gonna do is I'm gonna get up in here and give you kind of like a quick description on the ones that we already did so far. Okay. Trend flow and divergence. For accumulation distribution. Okay, average true range. Average true range is a volatility measure. End of the day, and okay, and we are on true strength index right now. All right, now when it comes to true strength index, let me delete this and let me delete that. Let's go to true strength index. Or you can just type in TSI. All right, here's the true strength index right over here. $25.25. So this is basically an oscillator. This is a momentum oscillator. It is going to give you some is going to give you some divergence heads up, but this is also going to give you an additional overbought, oversold kind of scenario. Now the levels over here is a little different. It's 25.25, so negative 25, positive 25. That's basically if you look at the stochastic oscillator, it's 80-20. If you look at the RSI, it's usually, I believe, 75-25. Over here on TSI is 25 negative 25. So it is going to give you the overbought, oversold setup. As you can see over here, there's right over here, there's some moving averages with the signal line. All right. And so when you look at this, the TSI, all right. Okay, you can see that when there's a cross up here, that is a signal for a buy. There's a cross down over here, that's a signal for a sell. But you could take it, you could take it another level. So when we go into settings in here, style, visibility, you can change the periods right over here. Okay. What I'm going to do though is I'm actually going to use let's use a vertical line. Sorry, a horizontal line. Okay, so 25, boom, right here. 25, boom, right here. Okay. So just on watching this over here, it will give me that overbought, oversold indication. Okay. Being that it does have, a signal line with the moving average. Okay. That is an additional plus right there. But for the most part, it is a momentum oscillator. It will show some divergences. So there's multiple indicators that you could get from the true strength indicator for sure. So true strength index. It's a momentum oscillator. It's going to give you overbought, oversold. And also cross signals on top of that. Let me change the settings on this. Let's do a text wrap. Yeah, like that. Okay. All right, next up we got parabolic SAR. All right, parabolic SAR. I'm gonna skip on the formulas because that could take up some time. But for the most part, the parabolic SAR, stop and reverse indicator, is a great indicator to use. I kind of use it and look at it as like a dotted trend line, okay, where it's gonna show the momentum of where the market is going. So if we go over here to indicators and we go over to parabolic SAR, that means stop and reverse. Okay, you're gonna see is these dots. Okay, so when you see the candles above these dots, that indicates price moving up. When you see the candles below the dots, that indicate that price is moving down. So look at it as kind of like trend lines, maybe a lot less powerful than the trend line is, but nevertheless it is just going with the flow and is letting you know what direction it's trying to go. All right, so it's either going to go up or go down. So if you see the candles below the dots, that's down. When you see the candles above the dots, that's up. It's not as strong as your trend lines, but it's going to be telling enough to let you know where the market is going. On the higher time frames, 30 minutes and above, these work great. Can you use them on the 5-15 minute? Absolutely, you can. You could do this. You could use this in combination with some other indicators that you may have. It does, to me, work better on the higher time frames. So just keep that in mind. Okay. The idea of this is that it's going to tell you when the market is going to stop and reverse. Hence the SAR acronym in the indicator name, parabolic SAR. All right. So this would be great to use when you are developing your momentum strategy, a trending strategy. The parabolic SAR is going to be an amazing addition to that for sure, right? So, I hid the zigzag for a minute, but let's say if I showed the zigzag and we go into the 30-minute, we're going to a 1 hour. Let's go into a 1 hour, right? And you can see how this would basically The parabolic will be an asset to that. I do consider the parabolic SAR to be more of like a secondary indicator. So while you may be using the TSI or the zigzag or the money flow as your main indicator, the parabolic SAR is like a supporting indicator, so to speak. Okay, it's not going to be the main indicator, but it's going to be it's going to play a supporting role to the other indicators that you may have on your chart, for your strategy template, so on and so forth. All right, let's cover more ground over here. We're doing good so far as pace is concerned, I believe. Okay. All right. So we covered parabolic SAR. Basically goes with the flow. Till it stops and reverses. All right, super trend. Okay. The super trend indicator. Let's hide some of this stuff. Let's go into indicators and look for super trend. Right here. There we go. Okay. So the super trend indicator is pretty cool. It's been one of my favorites for years now. Let's put it like this. There's a few indicators that I've definitely, helped popularize to the point where some of these indicators that were once specialized indicators are now a part of the default technical library of indicators that you could use on TradingView, which I think is pretty dope. But the super trend indicator, basically what it's going to do, it's going to show you the direction the market is going in. If it's shaded green, that means it's going up. If it's shaded red, that means it's going down. But then you have these moments where it'll cross together, and that's really the key right there. When you get into a position right before it has some kind of momentum, right, happening. All right. So the true strength index, all right, will be a great supplement to the super trend indicator. And what I like about the super trend indicator is the fact that it changes colors on you. So when the market is bullish, you see that the shades are green. When the market is bearish, you see the shades are red. And you can change it accordingly. So you can double click it, or you could go right over here to the super trend and go into the settings, go over to styles. You can switch it up a little bit. Sometimes I like to use a white and red theme. Sometimes I like to use a white and purple theme. It all depends on how I feel in the moment, right? But I will say that, boom, there we go. I will say that this is a great indicator to use for sure. Okay, I would definitely put this on my arsenal, and you can use this on any time frame, literally, even the 5-minute. It's been one of my favorite tools to use for binary. Of course, you can adjust the periods of how long you want the moving average, basically behind the super trend, to basically be for. Okay, so you want it for 200 periods, you want it for 500 periods. You could just basically go over here to the settings, go to inputs, all right, and adjust accordingly, and it will recalculate, and then you'll see how it'll display on your chart. But again, it's going to be another great indicator to use, okay, to your arsenal. I would recommend testing out all these indicators because there's going to be some that you're going to really enjoy using. All right, so look, we talked about super trend. Now next up is Ichimoku clouds. Okay, so super trend. It's basically average true range on the chart. Okay, it's a moving average for the most part as well. and basically it'll indicate trends and potential reversals. It's color coded, and so that's always a good thing visually. Okay, Ichimoku clouds. Let's save. Should we do Ichimoku clouds for last? You know what? Let's do Ichimoku clouds next. We'll just go with the flow of the list. All right, let's go to another chart. Okay. All right, on here, I'm gonna go to one of my loadouts again. And we're gonna do the Ichimoku cloud right here. There we go. All right, so the Ichimoku cloud. The reason why I was saying that, maybe we should save this for last is because it is the most complicated one, but it's all good. We'll get through this one, pretty easily, even though it looks so busy. Don't let it be too daunting to you. I'm gonna break it down for you real quick. All right, I think we good, just like this. Okay. So the Ichimoku indicator, okay, there's actually several indicators inside of the Ichimoku indicator. So it identifies support and resistance levels. It identifies the overall trend direction, shows price momentum, and can be a powerful trading signal or when combined with other indicators. The Ichimoku takes multiple averages, plots them on the chart, and uses the figures to compute a cloud which attempts to forecast where the price may find support or resistance in the future. So Ichimoku components, you have the conversion line, the baseline, and the lagging span. The Kumo, all right, cloud components is leading span A and leading span B. So we're gonna actually kind of show the visuals over here, okay? So here's the Kumo cloud, all right, the green one. This means the market is moving bullish. Right over here, the Kumo cloud red means the market was moving bearish, okay? So think of the super trend and what we just experienced with the super trend, and just think of the Ichimoku clouds as like a crazy upgrade to the super trend indicator, right? There's just an insane upgrade to it, okay? Now, we're gonna go through everything one by one, okay? So number one, the conversion line, all right, which is the blue line you see over here, all right? All right, you see this blue line? You follow it, okay? Now, you could read along with me, okay? But basically, the conversion line, which is the blue line, shows the short-term price momentum, all right? So think of it as kind of like the fast MA, within a alligator indicator scenario, basically, which I don't know why I'll have that listed. I'll do that next time then. But what you call it? So it shows the short-term price momentum, the midpoint price over the last 9 periods. So it's a 9MA, and it's an area of minor support or resistance. If price is above the conversion line, it indicates a short-term upward momentum. So if it's above the blue line, that means the market is moving up, okay? Even though, it's a short-term moving average, and it's not really, remember, the higher the time frame, the stronger the stronger the confirmations, okay? So it's an area of minor support resistance. If price is above the conversion line, it indicates short-term upward momentum. If price is below the conversion line, All right, right over here. Remember, the conversion line is the blue line. Okay, so when you see it, when you see the blue line is below, okay, which eventually that happens over time, when you see that it is below, all right, that indicates a short-term downward momentum. The conversion line is not used on its own, but rather intertwined with the other components of the Ichimoku cloud. Okay, so this is the first thing, the conversion line. All right, short-term MA, keep that in mind. Second, the baseline, which is the red line. It's basically a support and resistance level on the medium-term trend. Okay, so the period of this is 26 terms. So the first one was 9. This one is 26. This also is used to analyze price momentum like the conversion line. When price is above the baseline, it means that it is above the 26 period midpoint and has a stronger bias for upward price action. Unless there is a very strong trend, the baseline will often not be near the price candle for the most part, okay? Now, number 3, the lagging span, which is the green line. It's created by plotting closing prices 26 periods behind the latest closing price of an instrument. It's primarily designed to allow traders to visualize the relationship between the current and prior trends, as well as to spot potential trend reversals. Basically, analyze the relationship to the current price action. If price action or the candle is above the lagging span line, the strength in price indicates the trend is strong. If the price or the candle is below the lagging span line, the strength in price indicates that the trend is weak. Right? So look, you got your short-term price momentum, you got your medium-term trend situation, and you have your lagging span line, which is the green line, which indicates strong movements with the market. Now, if it isn't, above, okay, then that means that a reversal is bound to happen, okay? Now, let's deep dive further, okay? Check this out. If the lagging span line is about to cross the prior price line, this would be a bullish signal. If the lagging span that is crossing underneath the price, this would be a bearish signal. Okay? All right. Well, let's continue. All right. 4 and 5. The Kumo cloud. You have the green one, you have the red one. Okay, the Kumo cloud provides the definitive support resistance levels that can be projected into the future. This indicator is vastly different from other indicators that only provide support and resistance levels for the current data and time. Okay, let's bring this in for a second. All right, leading span A, the green one. Leading span B, the red one. Okay, here we go. B and A. Now, when I'm personally using the Ichimoku clouds, let me bring it over here. All right. Let me take out all the indicators right over here. All right, and let's bring the Ichimoku clouds real quick. Let me show you how I break this down. Real simple, okay? So now that we know what's up, this is default. All right, let me break it down ill for you, okay? Look, blue line is the fast moving average, okay? Short-term period stuff. All right? It's going to show you, what the shortest term situation is. So this right here, crossing up the red, all right? So the 9 crossing up the 26, that's a quick signal for a buy. Get in, get out, all right? If it was the reverse, all right, then you will go in for a quick sell, okay? So look, blue line crossing the red line, boom, get in on that quick sell. That is an indication of it, Okay, that's a weak signal. That's a weak signal, really. Okay, the red line we know is the 26 period. Okay, so this is basically giving you the indications of potential support resistance point while the market is trending. All right, it's some medium base signal stuff. All right, real simple. Okay, you will see, all right, that at sometimes you will see the red line gets away from the candles. And so that indicates what levels we should be paying attention to for potential stop loss, take profit price points. Of course, I like to use the bullish tool and the bearish tool to do that. Okay, the green line over here. This is the big signals right here. All right, the longer term stuff. That's the green line right here. The longer term stuff. Now let me tell you what I like to do. Okay, because I like to use other indicators in this place anyway. I actually like to take away a lot of stuff. So let me show you. When we go over here to styles, okay, I don't want the conversion line. I don't want the baseline. I don't want the lagging span. Okay. Now, as far as lagging span A and B, I'm cool with this. But I'm gonna switch up the colors. All right, all I really want is the clouds because these are the big boys right here, right? All I want is the clouds. Give me that, all right? And here's the plots background. That shades in the area, okay? And again, you can do whatever color you want. So I like to use this in combination with other indicators. This is all I really need from the Ichimoku side. This is telling me everything I need. To me, it provides strong enough signals. So if I see, all right, the market is crossing up my clouds, strong signal for a buy. If I see the market crossing down my clouds, strong signal for a sell. Or if I see a singular candle crossing up or crossing down the clouds, that to me is extremely strong already, all right? Because we're talking between 26 and 52 period, okay? So I'm satisfied with that. I don't need all the extra stuff to make my chart look very, very busy. Remember I spoke about the moving average ribbon yesterday, right? So the moving average ribbon is one of the great indicators I like to use in combination, all right, with the Ichimoku cloud. Okay, Ichimoku cloud, there's a lot you could unpack. You could literally, that alone is a whole strategy. The Ichimoku cloud is a whole strategy within itself. It's a full-on strategy, just one indicator, okay? But I like to take some pieces from the Ichimoku cloud so I can mix in some other indicators and mash them together. And if more than 3 or 4 indicators align with one another, when it comes to a direction of where the market is heading, then I'm going to be paying close attention to that. Okay, and Keltner channels. Okay, let's talk about Keltner channels. So in yesterday's lesson, the Bollinger Bands is the last thing that I covered. And if you notice, I'm going to bring up the Bollinger Bands again. Okay, I'm going to bring up the Bollinger Bands again real quick. All right, remember that when I covered the Bollinger Bands, I said that 90% of the time, the market stays in between the top and the bottom Bollinger Band. When it comes to Keltner channels, it is literally the exact opposite. So let me take out the Bollinger Bands, okay? Because the Keltner channel is the exact opposite. Let me show you what I'm talking about. All right, so when we're looking at the Keltner channels, basically we want the market to be outside of the Keltner channel. Okay, so if we see that the market is going above the Keltner channel, there's a strong indication that the market is going in an uptrend. When we see that the market is below the Keltner channel, there's a strong indication that the market is moving down. Okay, very strong indications. And so there's a lot of pips that can be generated from just looking at what the market is doing on the Keltner channels, itself. We did 30 minutes, an hour, 4 hours. I mean, there's literally plenty of pips to catch, at this level. Okay, so look, let me show you. So from right here, once it got outside of it, and it came here, let's just say we waited for this to cross back down so we could get out of the trade. Look at this, okay? This is, what we see, it's 158 pips. All right, 158 pips right there with that one move. Here's another thing. Boom. Outside of here, let's go back right here. Look, this is 222 pips right over here. So the Keltner channel is going to be one of your best friends when the market is trending, when the market is experiencing momentum. All right, when you see the candles are above the Keltner channel, think buy. Okay, when the market is below the Keltner channel, think sell, because those are strong signals for buys and those are strong signals for sells. Okay, literally, it's so simple to explain. And here's what I'm going to do with the Keltner channel, because it looks like the Bollinger Bands, but the functionality is really different. You want it to be outside and you want to ride the wave, so to speak. But what I like to do is I like to come in here, go into style, remove the middle line. All right. And the background, I like to shade it in a little bit. Right. And one of the strategies that I developed called, I actually had an original name for it. I ended up calling it Blue Gator just to keep it, rated PG-13. But basically the idea was I was using this in combination with the alligator indicator that I don't even think I went over, which I might as well go over now and just kind of show you how the Blue Gator strategy came to be. Let me take away the Keltner channel for a second, because I'm going to bring it back to show you how it works. All right, so let's go to the alligator indicator. Williams alligator, boom, right here on the technicals. Okay. All right. Now with this, okay, with the Williams alligator indicator, it consists of 3 moving averages. You have the small one, the medium one, and the large one. The small one is called the lips. So think of the alligator, the lips of the alligator. Then you have the teeth of the alligator, which is the second strongest MA that's on here. Okay, the second strongest MA that you have on here. All right, and then you have the jaw, which is the slow moving indicator, but the powerful one. All right, so you have the lips, the teeth, and the jaw. So when the lips crosses the teeth and the jaw, that is a signal for buy. Okay, when it crosses up, when it crosses down, that's a signal for sell. So look, the green crossing the other two, that is a signal for sell. Right. Just to keep it simple, all right? Just to keep it real simple, I like to color code it, and I'm going to show you in a second how that works. Now, the idea is that this is best when the market is trending. So when it does this, there's an uptrend, all right? When it goes the opposite way, all right, when it drops, that's a downtrend, okay? That's beginning. So if we're doing the measure tool, we do the measure tool, look at this. From this point to this point, all right, that's 352 pips. All right. From this point to this point. Okay, 378 pips. So you see, so very powerful moves, can definitely be made with the alligator indicator. That's for sure. Okay. Now, The idea is that the alligator is chasing the trend, whether it's going up or down. Whenever the market is no longer trending and the candles are intertwined with indicator, that means that the alligator is eating it. All right, the alligator caught the market, it's eating it. There's no opportunity. It's over, right? Until the next trend begins, until the next chase begins. So one of the original names of the strategy, when I use the alligator indicator, along with the Keltner channel, it was called the gator death roll. Okay, if you're familiar with alligators, or if you ever heard of how they attack their prey, once they clinch onto a prey, they do what's called the gator roll. So they'll keep twisting their body and twisting their body and twisting their body until they drag you into the lake, or until they got you in pieces, or whatever the case may be. So that's the idea. It's a gator chase, right? Basically, you're running. The trend is running from the gator, and you want to go in the direction of the trend. Okay, so that's the idea of it. All right, when there's no more opportunity as far as trending is concerned, all right, it gets rolled into the candles that you see right over here. So let me show you how it looks like when I just change the colors a bit, right? So I just keep the lips on here. I'll make it gold for it to be like my signal or whatever. The teeth, I'll make it gray. I don't really need to make it like any other color. I could just keep it real simple and just use this as my signal. See? Very simple, guys. Listen, we do not have to make this complicated. Now, when I unhide the Keltner channel, you can see how this would be a great combination to work together, because they're both trending indicators. So look, here's how I break it down, okay? Now, you're going to get several signals from this, okay? So one, we wait for the cross up. All right, it crossed one, crossed the second one. Boom. Okay, I could take that right there. All right, another opportunity comes when the market is actually outside of the Keltner channel. Now, when you could also have it to where, all right, let the gator be the signal, right? Or let the gator indicator be the heads up, right? And let the Keltner channel be the confirmation signal. So, all right, we already got one. All right, as soon as we get the second major confirmation to happen, we're gonna get in this buy. Boom, right over here. All right, started crossing up, get in on that opportunity, and there you go. Nice 200 pip move right there. So this is how you can use indicators, multiple indicators in combination together to come up with a strategy. All right, so. Can you mix other indicators into it? Yes, you can. Yes, you can. The more confirmations you have to get in order for you to take a trade, the better, because you'll be a little more effective, in it. But I'm kind of glad that I didn't go over the alligator indicator yesterday, because it allowed me to teach you a very simple strategy right now. And talking about strategies, that is the next topic that we are going to be going over on our next class. On our next class, we're going to be talking about how we can use certain indicators together, all right, to come up with strategies, working strategies, regardless of what the market condition is. We do know that the market, okay, is either going to be consolidating, okay, where we could use supply and demand indicators, or the market is going to be trending, all right, where we're using momentum-based indicators, okay? So we're going to cover this tomorrow, Thursday, May 16th, all right? And so I hope you learned a lot. We definitely covered a lot of ground. And, pretty soon, once I get through my strategy classes, I'm putting the calls that I do for these classes on hold so we can get right back to trading. I've done a lot of the educational material already. And so, we got to get back into the action. I just wanted to pause and give you the education before we get back into until we get back to doing live trading sessions. And talking about live trading sessions, I'll do my 11 a.m. stuff, but I'm also going to do 8 p.m. But I'm going to tell you, the 8 p.m. sessions that I'm going to do is going to be live trading sessions. They're not going to be They're going to be educational, but they're not going to be all the way meant for educational lessons. They're going to be for action taking. Okay. It's going to be parent friendly. Obviously, you see my kid running in and out at 8 o'clock when I do my sessions late night or whatever. So I'm calling these sessions parent friendly sessions. All right. It's not a learning moment on those sessions. It's, we taking action. Yo, guys, look, check this out. We're going to go in right here for a buy. We're going to go in right here for a sell, or at least this is what the market is telling me right now, right? It's meant to be noisy, right? You should be in a room with other people trading, okay? It doesn't have to be all the way quiet. If you want something really, really quiet, just take the signals that I send on the Discord and the Telegram. If you want super quietness and you want to trade by yourself, okay, that's fine. Take the signals from the Telegram and the Discord and move according to that. But if you want that live action stuff, it's going to be loud and it's going to be parent friendly. It's crazy, right? Before, back in the days, I did all my sessions for guys that were like me, people that just wanted to make money, travel the world, drive the hottest cars, live in the best cribs, really like live that lavish life. That was my market. But now my market is different. Now my market is parents. Now my market is older, maturer individuals, right? Or serious people in their 20s that want to make serious bread so they can live a life that most people are not going to live. They're going to have a whole lot of fun doing it. But our sessions are going to be parent friendly, so it's going to be loud. It's going to be loud, all right? 8 p.m. sessions are going to be loud, and I hope you're ready for it. So parent friendly sessions are going to be coming next week, okay? Tomorrow tomorrow is going to be the last educational lesson that I'm going to record and put out or stream and put out. And we're going to get right back to the bag next week, okay? So ladies and gentlemen, stay blessed, take care. Thank you so much for tuning in. I hope this was valuable. Comment, like, subscribe, share. You're probably watching this on the mindonbillions.pro site, another website. You may see this on YouTube, maybe on Vimeo. You're going to see this probably in multiple places, all right? Multiple different social media channels, groups, whatever. We have multiple communities. Okay, so take full advantage of all the knowledge that you're gaining from this, because it is free. It's free, right? But you can actually use that information to elevate your situation. That said, take care. I'll see you on the next live sessions. Peace.